How did you get into trading? What sparked the interest?
I really was not necessarily interested in trading, but I went through an intro.
When you got started, what were like a couple of biggest mistakes or your learnings?
I think is really important for new traders to know is
Which particular parameters traders should be looking at to start with?
so 3, 4, 5 areas that I would track. I mentioned you want to back test at least 100 trades.
Whether someone should consider going full time or maybe let's just learn side by side.
You don't know if you're going to be good at it, what your learning capacity is around this. You're not going to be a great trader in.
Welcome back to the Trading Map podcast, everyone, where we discuss market structure, risk management, the realities of trading, and how developing traders can continue improving over the long run. Today, I'm joined by Anne from New Jersey, who has been trading Forex for more than 6 years and continues to grow and evolve as a trader. Throughout this conversation, we dive into trading psychology, behavioral patterns, productive habits and routines, lessons from our trading journey, and practical insights for traders looking to strengthen their mindset and really improve their overall performance. So, if you have your iPad or your notebook nearby, this might be a good time to bring it back and take a note of the few key takeaways. Let's get right into it. Hey, and good afternoon to you. How are you doing? Thank you so much for jumping on.
Yes, thanks for having me.
The pleasure is mine. Thank you so much for taking the time also and jumping on here. And really, we want to delve a bit. It's a very interesting place. Like you have been coming more from the commodities and currency side. And I think there is a much more bigger audience than stocks, which are focusing and trading currencies and commodities. Because like these are more of the global instruments, right, as compared to stocks which only like cater to an individual market or individual exchange. So I think it will be great to get your perspective on all of these areas. But why don't we start with a quick intro first when you are trading currencies and commodities, but just in general, which markets, what kind of trader you are, and a bit of your coaching background as well.
Sure. Yeah, thank you. So I started trading in 2020. I went through an education program that I now represent to help others see if trading is a good fit for them. We primarily, as you said, trade currencies, commodities, indices, and precious metals. My particular favorites, I love to trade gold and silver because they move quickly. And as long as I am
Yeah.
using a trade plan where my risk is a lot smaller than my reward, meaning that if I lose a trade, I'm losing maybe one compared to winning the trade, I might win 6, 7, 8, 9, 10. So as long as my reward is a lot bigger than my risk, then I'm comfortable with the volatility in gold and silver. But not
Mm.
everybody is. That's one of the great things about trading is there's a lot of different ways to trade, things to trade, a lot of different techniques. So there really is something for everybody, once you start exploring it. I also do use an auto trader. So for my trades, the trades that I'm executing, I'm more of a scalper, meaning that they close fairly quickly. 10, 15, 20 minutes is kind of a reasonable time frame for my trades. But on the auto trader, I do use longer term strategies because I don't have to deal with my lack of patience on the auto trader. The auto trader just fires off the trade, it does its thing, and I don't need to be involved with it. I just manage it from the outside.
Got it. And as you mentioned, like 6, 7, 8 trades in a particular session. So that's kind of like the more scalping approach that you are taking. So just curious then, I mean, even before we get into your strategy, let's get a bit into your early phase. How did you get into trading?
Yeah,
What sparked the interest? I think that's always great to hear from
sure.
all of my guests. Yeah.
So I really was not necessarily interested in trading, but interested in creating an income on the side of a full time position. My two
Mhm.
daughters were in high school at the time, college bound. I'm a single mom. I wanted to be able to, I had money put aside for college, but it's never enough. And I had a goal for them to graduate college debt free. So I thought I'll do something on the side and I'll bridge the gap that way. And so I looked around at a couple different things, including running a franchise. And I found trading. I went through an intro to day trading program that the company still offers today. And I really loved it. I loved my coach. I loved the indicators. It just all really clicked for me. So then I invested into an education and started trading real money. And I also had a company funded account that I was trading. So that was my trading journey. I traded for about a year, and then I left that full time position and focused on my trading, which at that point was only maybe about an hour and a half per day. I don't trade very long, and I don't think you need to trade very long. And I think most people don't have the attention span to trade for very long. And I started representing the education program of the parent company, the one that I went through.
Got it. And I'm sure, like, trading in itself is it's really complex career and system to get into. So just curious, like, when you got started, what were like a couple of biggest mistakes or your learnings, earlier learnings, and some of the realities that we all have to go through as new traders?
Mhm.
Because I want to just connect this conversation to new traders and kind of early phase traders. So couple of like the mistakes or areas that you saw that these are the main areas that I actually need to focus on here to be good at it. For example, like we were discussing before the calls, one of them is trading psychology,
Hmm.
and
That's my
really,
answer. Yeah. So,
so that,
so two things came to mind when you were asking the question. One is the psychology, and I don't think that you know until you get into trading how well managed your emotions are around money. I've had conversations with several traders that you're going to learn the most about your emotions around money when you start trading real money. So learning to get that in check, I think is more than half of the battle to become a great trader. There's, plenty of opportunities to learn out there. There's plenty of indicators, there's plenty of trade plans, there's plenty of movement in the market. It's really about the trader and keeping him or herself in check. It's really easy, as you probably know, if you make a mistake and then you try to recoup your losses from a mistake, or
yeah,
if a trade that you think is a solid winner turns against you, you can easily get angry and get into revenge trading and all these things. So the emotional part is huge. That's the biggest part of the battle. The other thing that I think is really important for new traders to know is you don't want to just jump into the market with a trade plan and start executing with real money. It really is important to take the time to back test that trade over. I mean, you want to have at least, I would say, at least 100 trades to really gather the data on whether or not a trade plan works. So, if it works three, four, 5 times and you say, I'm going to put real money to this, that's not a great idea because it's just not enough data to know that it's going to work over time. I used to manually back test all my trade plans, I should say. We now have a huge automative piece where we just plug in a trade plan and put in the parameters that we want it to test on, and it can test a couple years in 3, 4, 5 minutes. So that's a huge time saver, and it's been a help for my trading.
got it. Great. And it's very interesting because you brought up the psychology and the technical side, which is the back testing. So the back testing research data, which particular parameters traders should be looking at to start with? Like is you can go deeper and you can really lay out a lot of different data points to do the research. But the basic parameters in your understanding, your experience, the main parameters that you think they are at least like the bottom line. If you want to see some kind of progress, you should be tracking at least these three, four, 5 areas bare minimum. If you want to share those.
So 3, 4, 5 areas that I would track. I mean, I mentioned you want to back test at least 100 trades with a particular trade
Yep.
plan. You want to look at drawdown. I mean, some trade plans overall might be really profitable, but they might have significant drawdown on your account, and that can be difficult to handle emotionally if you're not used to that type of thing. I don't like drawdown in my account, so I look for trade plans.
Nobody does. Yeah.
Yeah, when I look at the data points, I'm going to look for something that doesn't have significant drawdown. Less than 5% is optimal for me. Also, the length of time that a trade is going to run. I told you that I like to scalp trades when I'm
Yeah.
trading, but when I'm running trades on the auto trader, those can run longer. I don't particularly have the patience for, and people listening to this might laugh because, like, most people buy and hold stocks for quite a long time. You might not really see the return you want for a couple of years. I like to see my returns quickly. So, and I'm going to say I do own stocks. It's not that I don't own stocks, but as far as being a day trader, I want to be in and out. That's why I'm day trading. So a trade that averages 14 days to come to either a profit or loss doesn't really sit well with me as someone who is more of a more, you know, in my heart of hearts, I'm a scalper. So 14 days is a long time for a scalper. But the other part of that is that your money's tied up. You know,
Right.
you've got funds tied up in
If
this.
you want to take any other opportunities, just the money is not available, and you want to stay on top of the opportunities.
Right.
Got it. Yeah, please continue.
I'd rather make
Mhm.
the same profit in 2 days as I would make in 14 days because then that frees up that money again. So duration of trade is an important data piece for me for sure. Those are really the main ones I look at when I'm evaluating if I'm going to continue to lose a trade plan. And then of course, you know, there's the time of day. A trade plan could work beautifully from 6 a.m. until 10 a.m. and fail horribly in the evening. Even something like gold that trades, you know, 24/5,
Yeah.
24/7 technically, but in Forex it trades 24/5. You know, it might have times of the day where it's not profitable. So then time of day and sometimes days of week. Sometimes for some trade plans, Fridays aren't good because a lot of times people are
Right.
selling off to get out for the week before the weekend. So those are my main data points.
The data set first, at least 100 200 trades. You want to have like that data collected to actually see that if it's working or not, instead of just guessing 5 7 10 trades. And I think that's also the amount of time and energy that traders need to put in. And if traders try to avoid this, it's just not good. And one of the things that happens in trading is because like you are looking to make fast money, and then putting in that time and that energy and attention and having those this data set laid out. Yeah, I mean, it's a great point. I think I'll 100% agree with you on this, that you know please have your data set so you can see
Hmm.
your numbers,
Yes.
right? And that will bring in some confidence, so that hey, like, this is the risk reward profile, these are the profits and the kind of losses and
Hmm.
the frequency of winning and losses. All of those numbers you can understand, and the consistency in the execution will come, and
Right.
it will be a bit more better if you have the data points. So I'll agree on that. I think those are great points.
It helps with the
uh,
emotional piece too. If you know that a trade plan wins this percent of the time and your risk versus reward is this and it takes this number of days on average for it to close out, it calms you down because you're not in that state of like what's going to happen. Like you know what the expectation is. So having the data
mhm.
points should make you be a less emotional trader.
Definitely, I'll agree with that 100%. And of course, I think I want to delve a bit more deeper into the psychology side. One of the areas you mentioned at the starting, which is the revenge trading. That's one of the areas which can really, if they'll go out of spiral, it can go really, really not so good
Hmm.
as well. So, in your understanding, couple of like the main areas, I mean, that you implement, or you work in your coaching process, you work with your, traders as well, main areas that traders should be aware of on the psychology side, and maybe one or two techniques that maybe you are implementing to manage those situations.
Hmm.
For example, if it's not working out, maybe turning off the system for the day, or having a advanced risk management system in place, that hey, if I cross beyond this, I'm done for the day,
Hmm.
trading, and maybe open up again with a fresh mind, fresh perspective. Your thoughts about this, how to manage this?
Yeah, so there's a lot of different things that a person could do. And when I'm working with someone in an education program, I kind of give them what the options are and let them figure out what the best path is forward for them. For me personally, number one is stick to the rules. It's not about what I think is going to happen, it's about is the trade meeting all the rules of the trade plan. So I try to be very diligent in it has to meet the rules. The other thing that I do is I have an alert system set up that anytime a trade plan that I like is all the rules are coming into place. When I get the alert
Mhm.
on my phone, it tells me what the win percentage is, what the risk to reward is, and what's the expected duration of the trade, so that keeps me more settled as a trader. You know, if I put a trade in, and as you know, sometimes when you put a trade in, first of all, you have the spread, so it might immediately look like you're losing, but also it can pull against you before it goes in your favor. So knowing that the data ahead of time helps me to stay settled, and not pull out of a trade early. Like, let the trade run the whole way because you have the research behind it. You know how often this trade works. If you get out anytime a trade is losing, you're not going to be a good trader because trades are going to pull against you. But what I also offer to new people looking at this, is you can set limits on yourself. So you can set a limit of, if I win this much or lose this much, either dollars or percentage. Percentage is probably a better way to look at it. So maybe you set a
Mm-hmm.
goal of, I'm going to look for 0.5% of profit per trading session. But if I lose 0.5% or maybe 1/4%, I'm done. Regardless
Right.
of, then that way you have rules around it. Another thing I suggest to people is set a certain number of trades. Like, I'm only going to take 3 trades during my trading session. So that if
Mm-hmm.
you hold yourself accountable to that, that keeps you looking for the best possible trades. If a trade comes along, we talk about like good, better, best. If a trade comes along and it's a good trade, but I'm only allowing myself 3, then I'm probably not going to
Right.
take a good trade because I want the better trade or I want the best trade. So limiting the number of trades per trade session, I think, is another good way to go about it. And then at the end of your 3 trades, if that's where you set the limit, you accept what the results are. Not every day is going to be a profitable day, and you have to be okay with that. And walk away. The other thing we tell people is, if you are feeling particularly emotional, it's better to not take any trades.
Oh,
You
yeah,
know,
yeah. I
and
agree with
that
you.
that also spreads out to, maybe you're tired, maybe you're a little under the weather. Better to take no trades and stay even for the day than to possibly get yourself into a situation where you're not taking the best possible trades.
Definitely. And even if it's like some of the personal stuff as well, like in personal life, something is emotionally is just not going right. It's gonna affect, the trading decisions, and
Mm-hmm.
the
Agreed.
decision making may not be at the best during that day. So I'll agree with that as well. So you have brought up this automation part a couple of times
Mhm.
since we started the conversation, and I have been more of like the manual and discretionary trader myself. So just curious about this as well. Like, do you go more in favor of doing it and automating it and taking the emotions out of it and just letting the system run, or the manual one? Because at the end of the day, it's about maximizing the performance, whether
Right.
it's through automation or manual execution. And one of the things that I wonder about from time to time when the strategy is running in kind of like automated way, just how it's going to adapt to the changes into the market conditions. So the market can change in terms of the volatility. It
Mhm.
can change, let's say global news or some kind of scenario will come out and it can move the market a bit differently. So what are your thoughts about the automated versus the manual approach?
So for me, the automator, the our automator, and I don't want to speak in too broad of terms. You have to identify a good trade plan for the auto trader to work well. So I can connect any
Mhm.
trade plan I want to the auto trader, and it runs. So I have to have a good trade plan running, and I reevaluate the trade plans that I have running monthly because things do
Mhm.
change. What worked last year was a banner year for gold because gold ran up so much. I think gold was up
Yeah, it was skyrocketing. Yeah.
67, 68%. Our auto trader produced 240% in profit last year on gold.
Mm.
Phenomenal. But its gold is not moving nearly as quickly. So I reevaluate which trades I have connected to the auto trader monthly. I am at about 80% auto trade versus 20% manual trading, because
Got
the
it.
auto trader outperforms me. And that's, I think, I know it's because of the emotional piece. So why not let the auto trader do the work, and then I'm making more that way. I'm spending
Right.
less time looking at the indicators because I really don't have to, because I have the auto trader running. I do still trade manually because I enjoy it and I think it keeps me sharp in trading and understanding what's happening. But yeah, I'm at about 80/20, if not a little bit more. As far as reevaluating, like I talked about, the average of one of the trades I have running now is 14 days. If there is a
Mhm.
big global condition, like when the Iran war hit,
Yeah.
that closed my trade out immediately. There was so much volatility that it closed my trade
So
out. Now, in my circumstance, it went against me, but it could have just as easily gone for me depending upon my position. So I don't really manage it much. The big things that get announced, they create so much movement that it's too late by the time, even if you heard it and were on your computer at the same time, it would already
mhm,
be moving too quickly. And since I have the data behind how well my trade plan has performed over a period of time,
mhm.
even if there is a condition, a global condition, I'm probably still just going to let it run because even over time, there's been other global conditions. It's gone through other things that have happened and it's still performed at a highly profitable level. Otherwise, I wouldn't be using it.
Got it. So I think really more smarter approach will be that you consider some of these changes in the markets in advance while you're building the systems and then reevaluating it from time to time. I
Hmm.
think those can be a couple of solutions. But yeah, I mean, thanks so much for that. And because you mentioned you are running on almost 80% automation, my question is, are you handling like you're losing streaks by yourself? Because I'm a manual trader. A lot of manual traders are out there, a lot of automated traders as well. You mentioned it gets easier because it's automated and now the emotions are not playing that much. But how do you handle losing streak when you are trading manually, or the strategy is maybe underperforming, or the system is underperforming? Because this is, I think, one of the biggest areas of handling the losing streaks
Hmm.
for any trader out there. When it's like
We,
5, 7, 10 trades in a row, you start to question whether the strategy is right or not, and whether I should, how do I make changes in
yeah.
it, and stuff like that.
So that's why I look at my auto trader monthly. Our company policy is you can't change which trade you have connected more than once a month because you do have to. You don't want
Yeah.
people being like too reactionary, like, oh, I lost three trades, let me switch to another trade plan.
Oh,
Part of the data that we gather is what is the most consecutive wins and what is the most consecutive losses. When we run it through our back tester,
makes sense.
we know that
Yeah.
number. So, I can always look and say, oh, yeah, this could lose six times in a row, and I'm at five, and I get to be okay with that because it could lose six times in a row. If it gets beyond that, then I got to get serious about looking to see if I need to make a change. As far as my trading, the manual trading, I do have a tougher time with losing streaks than when the automator is trading. And so
Mhm.
that's just emotional management on my part. I'm in a position where if I have a couple losing days in a row and it's really getting to me, I can take the next 5, 6, 7 days off from trading. Like I don't have to get on and trade. And I think that that's probably a good practice for if people are feeling upset. If you're not arriving to your indicators feeling confident, feeling like you're going to have a winning trade session. If it's in the back of your mind, I've been losing so much, then that's a day to take off. That's emotional management right there.
Yeah, yeah.
And some people that are really anxious to make money, like you said, that you talk to people that they really just want to like make the money really quick. I encourage people all the time, you gotta settle yourself with the money making piece of this. The money is there and more will come as you get better at this and as your account size grows, but
Right.
it's not an overnight miracle. It is a
Okay.
marathon, not a sprint. So I try to settle people down with that idea that, oh, you're going to replace your full time income in 6 months. Maybe, but more likely you're going to build slowly over time and have a tool that you're going to be able to use for the rest of your life to create an income rather than I'm trying to trying to create quick income right now. So I try to settle people down on that. So my point with that is if you're on a little bit of a losing streak and you need to take a couple days off to set yourself right, it's better to hold your account steady than it is to
Mhm.
continue that losing streak because your mind's not right.
Great, got it. Yeah, no, I mean, I think those are really, again, really solid areas. And it's kind of like it's bringing up another question here. Let's say a big chunk, a big part of the trading community, people are actually looking to make fast money in trading. And so my question is that from your perspective, I'm not talking about like a couple of elite traders out there, but I'm talking about like, let's say, average retail trader sitting at home and trying to really make something out of the market. So my question is whether they should go full time or not at the starting, and especially like in the initial 1 or 2 years, whether someone should consider going full time, or maybe let's just learn side by side and continue to get better and build up a strategy, and maybe then see that what is the opportunity. What's your perspective on this? How much of a good idea it is to go full time?
I mean, I really think that people should do it side by side because you don't know if you're going to be good at it. You don't know if you're what your learning capacity is around this. You're not going to be a great trader in 30 days after starting. And anybody online that says that you are is just probably trying to sell you some package. It takes time to get good at this. So I would not want to see somebody say, I'm going to quit my job and just trade. Like, I don't think that's a good idea. And you know what's great about trading Forex is it does trade 24/5. So if you
Yeah,
have
yeah.
like a typical job, an 8 to 5
Nine,
type
yeah.
job where you can't trade in the mornings, there's the nighttime sessions. So you could,
Yeah, so there is Europe as well and the New York and couple of these sessions. So just maybe like finding a better time when
Mhm.
the job is taken care of, and then really building another opportunity. It's kind of like a maybe consider it as more of a side business initially before actually delving into it full time. And it is a difficult job. It's not an easy job
It's not.
to be. Yeah, yeah,
And it's different, I think, than anything that anybody has done. Like, you just don't know what it's like to be a trader until you're a trader. And so
yeah.
I would discourage someone from just jumping in fully, which is why I really love the program that we do because we really start people off small. We give them one
Yeah.
trade a day that one of our coaches chooses. We put them in a 30-day intro to day trading program where they're trading in the live market, but on a demo account, which for people that don't know what that is, it means it's not real money. So you're trading and you have the experience of being a trader, but you don't have any real dollars at risk. And we give them training videos and there's webinars and we give them one-to-one coaching in our initial program so that they can really
Mhm.
try this all out to see if it's a good fit. Then from there, if they want more, then we have more for them. We have education, we have bigger company funded accounts, they can connect more auto trades if they want. We have a lot of different options to help people. We don't push anybody towards anything. We really let them figure out what's going to work the best for them.
Right, great. And I think it's really important to manage the mindset and be really good on the psychology side. Bit about your strategy as well. Just curious on that side as well. So you're scalping, you're taking a couple of trades in a day, and so are you like more of the trend follower or more like the tape trader, or let's say there are contrarian traders who are going against the market and shorting, or just going against the trend. So which kind of like category you and your strategy will
Definitely,
fall in general?
definitely trend trader. our our indicators, four of our proprietary indicators, are tracking what the big money is doing, the huge financial
Mhm.
institutions. So I have no interest with my personal account to be trying to fight against what the big huge money is doing. So yeah, if they're buying, then I am looking for a buy. Not necessarily saying like, oh, they're buying, so I'm going to buy. Like, there's more data points in a trade plan than that, but that is certainly significant data points. Same thing if they're selling. In currency trading, you can go either way. You don't have to
Mhm.
own the pair first to sell it. So yeah, if the big money is selling, I said I like to trade gold versus the US dollar. If the big money is
Mhm.
selling it, I'll take a look at selling it also as long as my other data points line up okay. So yeah, I would say I'm a trend trader.
All right. And I think like that's a great area to work into, especially starting new or even a couple of years into it, is just really going with the market. I think contrarian traders, it requires way more experience to go against it and then take the opposite position. A lot more exposure is also kind of necessary for that. In even in trend trading, so there are two buckets. So one is the breakout. So you're going with the market and there are new breakouts that you want to trade. And then there is another category of traders which are trading retracements. So they are looking for the breakouts and they're looking for some pullbacks to get in. Where do you stand in general out of these? Or are you trading both?
Yeah, I would say
The
I,
breakout.
I probably trade both. When something is oversold and it's starting to pull up, it's starting to break out, then that would be an interesting opportunity for me. I probably have a bit easier time spotting that than I do spotting a retracement. So I probably
I
tend
see.
more towards the breakouts.
Yeah, and this breakouts are like more aggressive as well. Either you get the action right
Mhm.
away, or you don't. Like if it's the breakout is there and it will sustain, the volume is there, it will either continue or just gonna fall off right away. There is a trap, or it's just it's just a fake breakout, and just it will come
Right,
back again
right.
into the areas of interest.
And again,
So,
like this
but
is
yeah,
where risk management is so important. Like, yes, like if I think there's a breakout and it falls apart on me, I'm only risking the percentage of my account that I'm willing to lose. So risk management, I think that's one place where new traders get themselves into trouble is putting too much onto a trade. I am really strict about only risking the amount that I want to from my account. And when my account is bigger because I've been doing well, then that means that my trades are bigger. So, no matter what strategy you're using, you still really need to manage your risk. Good, proper money management is very important.
definitely.
How
And
about you? Are you more of a trend or a counter trend trader?
So I definitely a trend follower only, but at the same time, I look out for the areas where there is some amount of retracements in the areas of interests already. So I've been using a lot of market profiling, a lot of volume, understanding market structures, and then tape reading as well, because we can actually get live data on the order size and the order flow, from the exchanges, because we are more focused on the equities market. So that's the kind of like, we can get way more deeper data in level two, right? So we focus more on that.
Interesting. Yeah. How long have you been trading?
So all in all, it's 12 years by now. So it's
A
it's been
long
a
time.
long, long.
Hmm.
Yeah, 2014 is when I actually started
Okay.
trading. So it's a long amount of time. Great. I just last question, the risk management side. I think I want to have maybe a number if you want to share, because eventually people and traders are looking for the data and numbers.
Mhm.
So generally, what do you advise, or even advise? What do you implement for yourself? Half a percent on individual trade, or half a percent for the whole day, or how do you look at the risk
Yeah,
management?
so I'll risk. I personally will risk up to 2% per trade. More on my. I'll go higher on my. That's more on my auto trades because I have more confidence in the auto trade. So up to two per. I
Hmm.
have. I know I have a trade running that risks 2% of my account value on my auto trade. We tell new traders risk a quarter of a percent, a half a percent, really small amounts when they're trading real money. If they're trading on a demo account, then 1% is fine because then you get a little bit more movement. But when you start small, and then as you build your ability as a trader, then bump up to the higher numbers. We max out at risking 5% per trade. That's pretty high. You have to have a lot of confidence
Yeah,
in
yeah.
your trade plan on the auto trader or in yourself to be risking 5% per trade. I don't really have the stomach for that. That's a lot. I'm comfortable at 2% on the auto trader and usually about 1% on my manual trades.
Got it. Yeah, but definitely like 5%, I think it's a little aggressive for most of
Yeah,
the traders.
it's fun when it
Of course, like if
works.
it works for you, if it works for you, that's definitely great. I will kind of like fall in, let's say, 0.5 kind of percent
Hmm.
range. Generally two trades, three trades a day.
See, and that's
So that's
interesting because you've been trading a long time and you may have had the inclination to go higher because it's all you always want to go higher because you're going to make more money, but really slow and steady does win this race. And I would say half a percent, a couple trades a day is slow and steady. You're building your
build it up.
account,
Yeah,
you're
very well.
making money, but you're not trying to get the home run every day. That's where people get messed up is where
100%.
they're trying to hit the home run every day.
Yeah, and especially like if you're looking to build a career in trading, until unless like the market is not presenting the opportunity with a home run trade by itself, it's just generally it never works for me.
Hmm.
I just want to stay focused, and just risk management is everything. Everything else will come after that, even the strategy and the systems and the approach that we implement. But yeah, I mean, I think there are a lot of great insights, and thank you so much. A lot of great takeaways as well, I think, for new traders. And thank you so much for taking the time and really shining the light on out of your experience on some of these areas. I think traders will really enjoy this particular conversation. So, where traders can actually find you to learn more about you and your work?
Yeah.
I have your LinkedIn handle for sure, but what else? Where you are you on Instagram also?
I do, well, I have an Instagram. I don't really use it that much. So, currencytradesystem.com is my website. And then I'm more on Facebook than I am on Instagram, although they're connected. And my Facebook is not necessarily tied to trading. It's One Life Live It 2020. And because I do think that trading is a way to really maximize what you're doing in your life, whatever is important to you personally. I love to travel, and so trading is a way for me to have the freedom to travel regularly. But I would say currencytradesystem.com is the best way to check out what we're doing. The office number is on there. People are welcome to call that. We have testimonials. We have a leaderboard on there actually for our auto trader, so people can
Right.
check out the results, which can be pretty interesting and exciting. When you talk about really being able to grow an account.
Great. I'll definitely make sure to leave the link of the website in the show notes. I think it's always one thing that I believe into when like anyone starting new. I think it's great to have, let's say, more resources to
Mhm.
start with.
Absolutely.
More more education, more coaching. I think that's gonna just bring in, you learn by mistakes,
Hmm.
by making mistakes real time, and just the time that will go into it. Just you can shorten that curve if you are just part of the community, or you're utilizing more resources, and getting having more wider perspectives. I definitely never did that, so I had really really bad years, starting out initial 3 4 years, but nowadays I think I understood the power of that. So we definitely have like group of people trading together and just really making the best out of the markets and having really wider perspective. But yeah, I'll make sure to leave the link of the website in the show notes. And again, thank you so much for taking the time and becoming a part of this conversation and the
Yes.
podcast. I really enjoyed speaking with you.
Yeah, and I enjoyed speaking with you as well. And I wanted to thank you for having me. And also thank you for doing this because, like you said, I do think this is important for not only new traders, but seasoned traders. Sometimes it can kind of be a lonely road to be a
Yeah.
trader. It's not necessarily for me because I'm working with other traders regularly, but people that are trading solo and trying to figure this all out, sometimes they can kind of feel left out in the wind. So I appreciate you doing this podcast. I think it's great.
Great, Annie. Thank you so much again for your time. That wraps up today's episode, everyone, and I'll close things out here. Before we finish, I would like to thank the sponsor of the Trading Map podcast, which is Bull Street Edge. Bull Street Edge is a trading technology company built for traders who are serious about developing a better process, improving performance, and making more informed decisions in the markets. The platform includes a variety of tools such as Trading Journal, their Trading AI Coach, charting tools, a lot of research, watch lists, and access to a growing community of traders. If you're looking to become more disciplined and structured in your trading approach, be sure to check them out. I'll leave their link in the show notes below. And if you enjoyed today's discussion, don't forget to like and subscribe and share the episode with other traders who are committed to improving their trading journey. I'll continue bringing on experienced guests who can share valuable insights, lessons, and perspectives from the markets. Thank you so much for joining us today. I will see you in the next episode, and until then, stay disciplined, stay patient, and be great.